Land Turner is a seasoned finance educator with over 2 decades of trading experience. He's taught at prestigious institutions such as the Chicago Board of Trade and Mercantile Exchanges, Utah State University, and currently Utah Tech University. As an entrepreneur, he's the founder and driving force behind Gecko Software, developers of cutting-edge, award-winning trading platforms for the financial markets, stocks, futures, forex, and options. His brokerage firm, Gecko Financial Services, also specializes in futures, options, and forex trading. Mr. Turner is the editor-in-chief of Pitt News Magazine, offering valuable insights for traders. Beyond finance, he's also an avid real estate investor and private pilot. Explore Mr. Turner's contributions to the financial industry online at trackandtrade.com, geckofs.com, and pittnews.com. It's great to welcome you to our community. Now, here's Mr. Turner.
In this video, I thought we'd go through as my first intro into the stock market trading channel. I am here as your host for Dr. Scott Brown. I am your substitute teacher, I guess. He's on vacation, and so I get to take over for a couple of days. And as we get to know each other a little bit better, we will have a lot of fun and enjoy different ways of trading the financial markets. You saw my little introduction. I am a university teacher. I teach at the university down in St. George, Utah, and I love doing that. And Doc Brown actually is the one who got me that job, and so I appreciate him, and I am here to help him when he needs to go on vacation. Now, Doc Brown and I trade very differently. He is quite a superstar in his own right. He's quite a unique character, as you guys all know. And so we're going to have some fun. We're going to do a little bit things a little bit differently. And if you don't mind, for a couple of weeks, we'll kind of maybe go off track. And then when he comes back, he'll pick right up where you guys left off. But we're going to do some fun stuff. And the first thing I thought we would do today in today's class is we're going to go through and we're going to look at TradeMiner Pro. Now, what is TradeMiner? TradeMiner is set up for us to identify recurring price patterns and trends. All right, markets have a tendency to do the same thing over and over and over again, year after year after year. And so these are called seasonal trends or seasonal patterns. And so what I want to do is I want to go through with TradeMiner and see what seasonal trends or what stocks have a tendency to trend during this time of year. And so the way we do that, this is an AI application. AI is all exciting and everybody's talking about AI right now, right? And so we want to use an AI application to help us know what to trade. And so we're going to come up here, and up in the upper left-hand corner you can see we got a series of tabs, and we have the search tab, we have the neural network tab, we have the portfolio tab, and we have the accounting tab. And of course there's a couple other here in here, trade alerts, settings, and education. So what I want to do is I want to come back to the search tab, and we're going to search through the month of June, and we're going to find out what stocks have a tendency to run at the same time each year, the seasonal trends, all right? Okay, and the way we do that is we come up here, and the first thing we want to do is we'll just read the prompt, all right? So this is your AI prompt, and we come in here, and it says, find and select high probability trading opportunities for your portfolio. So we're going to search for trends in the month of. Now, we can do symbols, and we can come down here and search for seasonal symbols, but that means you have to know the market that you want to look at. And at this point, we're like, well, we don't know what to trade. Let's just tell us what to trade, AI system. All right, so we're going to come in here and we're going to say in the month of, and we're going to say June, find trends that have won at least, and we're going to put in here 85% of the time. We could put 95. We could even put 100 if we wanted to. But we're going to put in 85% of the time. We're going to show both bullish and bearish, or actually let's just do bullish. We only know what we want to only buy and go long at this point, okay? So we're going to do bullish trends, and we're going to list trends that last at least 20 trading days, but no more than 30 trading days. So we want kind of that window where they're at least a couple weeks long, but don't go beyond a month's long trade. So these are trades, these are not investments. All right, so there's a big difference between the two. This is going to be an aggressive trade. We're going to get in, we're going to make some money, we're going to get out. So we're going to find at least 15 years of history. So that means that it's at least 15. It can be more than 15, but it's going to be at least 15 years of history. And so what that means is that we're going to find trends that have been 85% of the time over the last 15 years have been bullish during the month of June for at least a 2 to 4 week time frame. All right, that's a pretty good list, right? Sounds pretty good. So we kind of come down here, and the system is going to find a bunch of duplicate start dates and duplicate end dates, and they'll kind of travel around. So we're going to remove the same symbol duplicate start dates, and we're going to remove the same symbol overlapping dates. So we'll get kind of more of a clean list here. So what I'm going to do is go ahead and hit search now, and the AI system is going to go out and it's going to go through a huge database. It's called a cubed database, where all of the historical data has been cubed into a market database, and it's going to search down through there and find, based on our criteria, what our prompt is. All right, so it comes up and it gives us a list of these, and it found 271 of these. Now, we also go through and we have the AI system give us a score. So as you come down, you can see we got the score right here, and all of these at the top are green. Now, 5 is the highest score you can get. And, of course, they're all bullish. This is all markets that are rising in price. You can come down and you can see the score starts to go down in scale. And so now we got some yellows in here, and now as you come down a little bit farther, you're going to see we're going to have some reds down here at the bottom. So these are reds. So obviously green is good, red is bad. Now that's not necessarily true in here, because all this is doing is we've gone through with the score and we've got a weighting. Now if you know anything about AI systems, you can weight your scores. And so if you come into the settings over here, into the user preferences, you have a way of weighting your scores in here. And what we're going to do is 5 is the best score. And we can come in and we're going to start looking. You can sort on any of these headers or columns. You can sort by the score, and we can find the worst ones. Now, obviously, I don't think that's what we want to do. We want to look at the best ones, right? And 5.0 is the highest you can get. And so what we're going to do now is we're going to go through and we're going to decide which ones of these we want to go look at and maybe put a trade on. So the first thing we need to do is we need to look at, let's just look at the first one in the list. It's called Cintas Corporation. And between June 28th, 2024 and end of close on August 8th, 2024, 88% of the time over the last 16 years, that's a 42 calendar day trade, the average profit has been 8%. So it's made 8%. Now you can see up here, this is a $10,000 investment. So we're comparing apples to apples. That was an 8% return on a $10,000 investment. So that's a pretty good trade. That's the one we can double click on that and we can bring it over into our neural network. Now I'm going to come back over and let's look at the next one. So now we have Republic Services. This is June 27th. Between June 27th and July 26th, 88% of the time over the last 16 years, 30 calendar days, this thing has averaged 4%. Now we can sort by any of these headers. So I'm going to come in here and I'm going to sort by average profit. All right, let's see which ones have given us the biggest profit. So there's one that is 11%. So that's ISRG, Intuitive Surgical, between June 13th, 2024 and July 23rd, 2024, 85% of the time over the last 20 years, 41 calendar days, it's averaged 11% return, or $1,000 on a $10,000 investment. That's pretty cool. Now it scores 3.68. It's not a 5, but it's a 3.68. It's still green. That's pretty darn good. Now, that's 85% of the time. Now, again, we can sort by score, and we can bring up the winning percentages, and we can come up here and look at this. There's a 100%er. That's Visa. So Visa, between June 27th and July 26th, 100% of the time over the last 15 years, that's a 30-day calendar, it's averaged 6% return between those dates. That's pretty cool, right? Let's add that one. We like that one. We're going to add the 100%er. Here's a 96%er over the last 24 years. Wow, look at that one. Now, it scores 4.47, which is pretty good. It's not a 5, but I think the reason it scores a little bit knocked off is because it looks like most of its money was made in the early years. Between 2000 and 2007 looked like the biggest years. 2016 was a pretty good year, it looks like. But nonetheless, it's 96% of the time averaging a 7% return. So do you want a larger win ratio? Do you want more years of proof? Do you want a larger average return? You can click on any of these headers and we can see any of these things. So here's another one. Here's the Dexcom Inc., which is a, what's that? It's a medical facility, right? Make medical devices. June 10th, 2024, between June 10th and July 8th, 87% of the time over the last 15 years, this thing's returned on average 10%. So that's a pretty good return there as well. So let's go ahead and let's click Dexcom, and we're going to click IRSG. There's 3 nice trades. Now there's a bunch more in here, and again, just because they're yellow doesn't mean they don't match the criteria of the prompt that we put in up here. It still does. We just scored as a little bit less for one reason or another, based on the averages for one reason or another. And this one looks like maybe it's because most of the profit was in the early years, had some bad ones, and then out in here we've had smaller years. That's why you might get a smaller score. All right. so it's not making as much money as quickly or as evenly as some of the others with higher scores. So there's 3 nice stocks for us. Oh, we actually got 4. We got a bonus in here. So we got 4 nice stocks in here for us to look at. Now, I'm going to sort these by date just by clicking the date header, and you can see that it says June 10th is our first one, and today is June 4th. So we still got a few days before this one kicks in, and we need to start looking at it. The next one is June 13th, June 27th, and then June 28th. And so these are 4 stocks that we're going to be very mindful of and we want to look at. Now, this is going to calculate the probabilities, and we can try and calculate the probabilities. It looks like we got a few days until some of these go in. Let's go ahead and hit calculate on the probabilities. But the probabilities to calculate on the probabilities in TradeMiner, it's the best. If it gives you the best, closest anticipation of whether the market's going to be profitable this year versus last year or the previous years, the closer you get to the date, all right? Because it's easier, the closer it gets to the date, the easier it is to make a prediction. So we're still a few days away from these dates. So what it's doing is coming in here and it's saying this one here has a high probability, so it really likes Dexcom. This one has a high probability. It really likes Intuitive Surgical, and then these are too far out so far for it to go through and give its calculate its probability. Now again, this is the AI system going through, and what it does is it creates a fingerprint for each one for each year, and then it compares this year to all the fingerprints in the past, and it says, does this year look like a winning year, or does it look like the fingerprint of a losing year? If it looks like the fingerprint of a losing year, it tells you, it scores it down lower. If it looks like the fingerprint of a winning year, it scores it up higher. So these are obviously scoring higher. We do still have a few days to go, so we could run that again in a couple of days. Probably on July 7th, we might want to run it again and see how that one's doing with Dexcom. But nonetheless, we're going to move these, all 4 of these, over into our pick list. We're going to come down here and we're going to add them to our pick list. So we're going to use AI one more time. So now we're over here in our pick list on the portfolio tab, and we can pick its favorite one. We're going to have the AI system tell us which is its favorite one out of all 4 of these. Now we can, there's only 4 of them, so we can go ahead and we can just trade all 4 if we wanted to. But if we just wanted to know what its favorite one, what's your favorite one, AI system? Now we know we've got 2 scores down here that are 5-0, so we're going to come down here and read the prompt for tab 3. Actually, we want to put in all 4 up here because we got 4 markets. So we're going to say, I would like to be in no more than 4 at a time, and I would like to add 1 at a time. So when selecting for my portfolio, only include trades where the probabilities have been calculated. We're going to say no because we got 2 in here that haven't been calculated. So we're going to go ahead and hit auto select. That's its favorite right there. It likes Dexcom the best out of those 4, so it picked Dexcom. So Dexcom is the number 1 pick for the TradeMiner system. It's telling us that's its favorite pick. So we're going to go over, the stock symbol is DXCM. So we're going to switch on over here to our trading platform. DXCM. All right, there we go, Dexcom, and it pulls up, and oh, look at it tanking right now. It's dropping down, so maybe we're going to look for a rebound down in here. And we're going to come into a little bit of technical analysis in here. What we've got on here is we've got turned on the bulls and bears system, and as you can see, it's what's turning the price bars red, yellow, and green. And this is a proprietary trading system that I developed, and you can see the arrows are pointing down. Now the settings that I have on this, if you come in here to the bulls and bears, you can see I've got it set to a sensitivity setting of 72. It is the progressive formula. I do have the blue lights turned on, which are our Elliott wave counting system. I'm going to go through and teach you some of that stuff during the next couple of weeks while we're here together, substituting for Doc Brown, all right? And then I have arrows on all color changes, which is going to tell us which time it breaks out of the Fibonacci sweet spot, because the way the bulls and bears works is it's all based on Fibonacci and Elliott wave. All right, so there's a 5-step setting or setup that we use when we create a trading strategy, right? So we have to count, measure, set up, trigger, and follow through. That's our trading strategy. What are we going to count? We're going to count the waves of the market. We're going to count the Elliott waves. Markets have a tendency to move in waves, 3 drives pattern, drive 1, drive 2, drive 3. This is all probabilities. It's like going to the blackjack table and getting your little player card, and that little player card tells you the odds of what market's going to do. Well, we can do the same thing with the stock market. So that's how we count, measure, set up, trigger, and follow through. We're going to use the odds, and we're going to put the odds in our favor, and it's all about trading the odds. So we want to count, where are we at in the count? So we're going to do that. We're going to learn the count this in the next couple of weeks while we're here. We're going to learn how to count the market. We're going to learn to measure the market. So we want to measure those wings or those legs, right? And then we're going to look for setups and triggers. And then we're going to look for the follow through. How to getting into a market is easy. Getting out is the hard part, right? So getting out with a profit is the hard part. So we're going to count, measure, setup, trigger, and follow through. We're going to learn those. But today we're just going to look strictly at the seasonal nature of markets. And so I want to come in and I want to teach you a little bit about that. So what I want to do now is I want to come over and show you that the down arrow, I can turn that off and make it one buy for every sell. But we want to have it on all arrows on all color changes because this has to do with Fibonacci. Now Fibonacci is what's causing these markets to turn yellow. If we go through the Fibonacci sweet spot, and I'll teach you what that is, the Fibonacci sweet spot is the neutral zone. So markets have neutral zones, and they go through a neutral cycle. So when they're going in the neutral zone, it's not bullish or bearish, right? So we need to know whether the market's breaking out of the Fibonacci sweet spot to the downside, which would turn it bearish, or it would break it to the upside, which would turn it bullish. So a market can go in and out of that sweet spot, which is what it's done here. It's kind of a little whipsaw here on Dexcom. So you can see this is the Fibonacci sweet spot, the neutral zone. It turned red. Now these arrows aren't necessarily buy-sell signals. Now you can use them as buy-sell signals, and we oftentimes do, but they are specifically designed to be bullish bearish arrows. They tell you when the market has changed from neutral to bullish, or from neutral to bearish. And that's what they're telling you. So it's gone from yellow, which is the neutral zone, to red, which is bearish. Or we've gone from neutral zone, which is yellow, and then to red, which is bearish. So we got all kinds of little red signals down here. The market is very bearish, and we can see the market's coming down. We can also see markets have a tendency, again, probabilities tell us markets have a tendency to do 3 drives. So this is drive 1, and then we have a counter trend coming in here. And we use these blue lights to just kind of give us a guideline. They're like mathematical trend lines, so mathematically calculated trend lines, and we draw those in there. So you can see this is the counter trend. So this is drive 1, counter trend, and we're in drive 2 right now. All right, so we're going to learn to count these, and we're going to have drive 1, drive 2, and oftentimes it will tell you what the probabilities are of this thing turning around at a certain point and starting to rally once again. Now we got the seasonal nature of this market, so we're going to come over and we're going to try and coordinate our technical analysis of setups and triggers with the seasonal nature of the market. All right, so it's kind of a 1, 2, 3 knockout punch, and that's the way this thing works. So we're going to come in here around June 10th. We're going to start looking for this thing to turn and start to rally going into the 1st of July or the 8th of July. So June 10th is our setup. So we're right here, and right now we're kind of coming in here. We're June 4th, so we got a couple more days. Now it doesn't mean that it has to enter at exactly that day. What we're telling you is on June 8th we're going to draw a line in the sand, and we're going to say on June 8th the probabilities are that by June 8th or July 8th that thing's going to be above that line in the sand on June 8th. On what am I saying? June I got to go look again. June 10th we're going to draw a line in the sand, and we're going to say, okay, 80% of the time, 87% of the time by July 8th, this market has been above that line by 10%. That's what it's telling us, all right? So it's not saying that it's going to immediately turn and start to rally on that day. It's just saying we're going to be above that line 87% of the time. We've been above that line on July 8th. So what we want to do is we want to coordinate and realize that we're going to be bullish on this market once it gets down into this region or down into this second drive down. And there's the possibility it could do a third drive, and then it could come up and create what we call a head and shoulders formation, right? Like this, a little head and shoulders. You guys are mostly all familiar with head and shoulders formations. And we're looking for this market to rally once again, right? And that's what we would look for. And going out into July, we want to see this thing up into the upper market. So we may get kind of a rebound here. There's lots of things the markets can do. Markets can go all kinds of things, but we're looking for this market to rally up in here. And around July 8th, we're looking for it to be at least 10% above that white line on that date time frame. All right, so that's how we're going to look for this market to go. But nonetheless, this is what we're looking for, and that is Dexcom. So we're going to come in and let's look at the next one. The next one, let's have the AI tell us what its second favorite is. So its second favorite is, boom, we're going to come in there. And the next one is Visa. It likes Visa, and Visa starts on July 26th. So we got to wait on that, or June 27th, sorry. June 27th. We're going to wait till the end of the month on that one. That's a little bit farther out, but it likes this one on June 27th. We're going to start looking at Visa. So let's keep this one. Let's keep Visa on our watch list. we'll put it in here. Let's bring up Visa and take a look at it. We still got a little bit. We still got about 3 weeks before we can actually start getting serious about this one. But it's a good one. Starts in the middle of June, and I wanted to have the AI system tell us what his favorite was. So we've got a little bit of time out here, June, towards the end of June. This thing, we're going to start drawing a line in the sand. We're going to say at some point it's going to be about 10% above that line by within about 4 weeks. So that's what we're going to look for. We'll look for this market to maybe make another drive down. You can see we've got one nice big drive down here, and then it kind of made this little bobble thing in here, and it just really didn't go well with the drives, did it? So you can see over here, we come back and look, we got kind of a multi-drive system here. We can see drive 1, we got the counter trend, got drive 2, we got the kind of a little counter trend in here, and then we got drive 3. Almost breaks right there. Almost wants you to call it drive 4. So we got 4 drives in there. If we go back a little farther, almost like that's a little bottoming formation in here. So this is our drive 1, drive 2, drive 3, and almost like a little drive 4. But I'm going to combine this one. So this is drive 2, and then that's drive 3 right there. All right, so that's how that works. We come back, we'll look at it one more time, see if there's any more drives, multi-drive patterns, because the market is just a tendency. It doesn't mean it does it every time. Doesn't mean it always goes through 3 drive patterns. It sometimes can go 4, 5, 6, 7, 8, 9, 10, certainly can. And it doesn't mean it can't stop at 2. It doesn't mean it can't stop at 1. It's just the probabilities, right? And the higher it gets in these drives, the lower and the lower and the lower the probabilities of a continuation. So here's a drive 1, here's drive 2, and here's drive 3. And you can see them pointed out pretty easily in there once you have the right tools to help you. And so there's your counter trends in there. So there's your downtrend that starts up in drive. And if you come in here and turn that bulls and bears, turn that arrows and all color change, it's a little bit easier to see some of these arrows in here. But I like to see more arrows. I like to see where it's breaking out of that Fibonacci sweet spot. When it does this kind of thing with lots of arrows, that's an ugly spot. We don't want to be trading that. That's kind of an ugly place. So that's kind of what we're looking at here on Visa. And of course what we've got in here is we've also got our moving averages in here. We got a 28 period moving average, that's the green line. We've got a 50 period moving average in here, that's the red line. We got a 100 period moving average in here. And we got a 200 period exponential moving average. Now we use those as areas of support. So as the market comes down, we'll look for them to bounce off of those areas, break through them, come down to the next one. We'll use them as resistance on the way up and support on the way down. All right, so that's kind of what we're looking for here, and that's how we're reading these markets. So we're going to come in and let's go to the next one. That's Visa. And the next one, it says let's have the AI system. We're going to go ahead and auto select. So there we go. That one is CTAS, Cintas Corporation. So that one starts June 28th. So it's even out further than Visa. But let's go look at it. CTAS. So we're going to come in here and open it up. CTAS. All right, CTAS. So there you go. So wow, that market's really taken off, isn't it? It's going drive after drive after drive after drive. Look at that thing. Boy, that's a rock and roll market. So we got drive, little tiny drive here. So drive 1, drive 2, drive 3, drive 4, drive 5, drive 6. Boy, when it gets up like that, the odds of it keep going higher is lower and lower and lower. Not that it can, it certainly can. Look at that little counter trend come in there, broke those blue lights right there, and up it went again. Now we got another drive. It's going up. Just remember, you're drawing your trend lines at each one of these blue lines. These blue lines are just mathematically calculated trend lines. That's all they are. And so you want to kind of draw your trend lines where the computer draws these blue lines, because we got a whole lesson we can teach you about that. That's really cool stuff too, and I'll show you how to learn this stuff. But for now, we're just giving you a quick introduction, get to know each other a little bit. Here is your substitute teacher for Doc Brown for a couple of days, and we'll work on this together. All right, so this is Cintas, and of course we're going to come back over, and Cintas is telling us that between June 28th and August 8th, 88% of the time over the last 16 years, that thing's increased in value by 8% in a 42-day time frame. So we're going to keep our eyes on that one. The last one it's got in here is Intuitive Surgical. So we'll go ahead and we'll auto-select that one. That's ISRG, and we're going to come and pop over to that one, ISRG. So these are good stocks to watch, and we just want to keep our eye on them. Doesn't mean we're going to trade them. It also just gives us something that we can watch and see if we're going to get a seasonal push through and a continuation of the trend. So ISRG. Now, again, we're going to come through, and it's breaking new highs right now. and it says that it's going to be a good one to buy in about 3 weeks. So I would imagine we'll probably get some sort of a little drawdown up in here. We may get kind of a rally. Oh, it already broke the blue lights. So there's drive one. So there's drive one on the new trend. So this is the market goes sideways and it gets all this red in here. We're going to start a new trend. So this is a new drive one. I bet we get kind of a little pullback, and then we'll start probably going into drive two during the seasonal nature of this market, the seasonal trend. So that's probably what we'll be looking for. We'll have to wait. This has still got 3 weeks out ahead of us to go and take a look at that one. So we'll have to see what happens with it. But nonetheless, that is our 4 stocks for the day. We've got ISRG, DXCM, CTAS, and Visa. All right, guys, that's just a quick rundown on 4 stocks for you today in Stock Market Trading Channel. And I am anxious and looking forward to getting to know you better as Doc Brown is spending some off time. Very well deserved. He's a hard-working man. So we will study together a little bit, and I will catch you again tomorrow.
We hope you enjoyed this window into the seasonal nature of the financial markets. As always, we want to remind our traders that the market is full of opportunities, but not without risks. Past performance is not necessarily indicative of future success. Stay engaged with Stock Market Trading Channel for more insights and expert analysis to guide your trading journey. If you would like a copy of Mr. Turner's 220-page workbook, the manual to this class, titled The Fibonacci Effect, Stock Market Playbook of Strategies, search Lan H. Turner on Amazon.